What is going on, investors? Back again. Time to take a look at Verizon Communication, ticker symbol VZ. This company just reported Q3 earnings and gave a little bit of update on guidance as well. Before the bell today, we'll jump into the numbers and then finally we'll jump into the stock chart. I actually think this stock is pulling into a zone where if you want to buy some shares of Verizon, add to a position, maybe buy your first couple shares of Verizon. I actually think we're getting dangerously close to an area where you could potentially do that. Now, Verizon has a 4.38% dividend and a $2.51 per share dividend. Guys, if you think that's a nice dividend, hit that like button and maybe consider hitting the subscribe button as well to the channel. We'll have Tesla update after the bell when they report earnings. So Q3, Verizon topped the profit estimates. They also gave this guidance that came in. They're expecting EPS growth of 0 to 2%. That was between, they were actually projecting a 2% decline to 2% growth. So they don't think their EPS is actually going to decline for the full year. So they are actually upping their guidance just slightly. So that's pretty nice. Everything else pretty much in line. Let's jump over to the numbers here. So we've got 3 months ended here. We've got a year over year. This was 3 months. And then we got 9 months over 9 months as well. They're heading into their Q4 as well. We see we're down a little bit, 1.2% for the quarter and then 0.8% for the last 9 months. Pretty negligible, honestly. And so wireless equipment revenue, again, this is a loss leader type of business. If you ever looked at some of our other analysis in this, they spent $4.3 billion to make 4.1. They're basically giving this to you for free to make this service revenue. So we've got total operating revenues actually up a little, down a little bit, 4.1%. That's not too bad for the last 9 months, down 3.6%. Again, difficult environment, obviously a competitive environment as well. Verizon holding in there nicely. So our costs now, what you want to see is when a company's not growing like this, a couple things you want to see. First thing, we want to make sure this dividend is safe. So we'll take a look at that here in a minute. The other thing that you want to make sure is they're controlling costs nicely. So we see here total operating revenues in the quarter down 4%, but take a look. Our total operating percentage is down as well, about 3.4%. So that's pretty solid. So operating here for the 9 months, we were down 3.6%. Not quite as good here. We're down about 2%, but they're controlling costs relatively well. Okay. If these costs were going up rapidly, I think I'd be more concerned with what's going on for Verizon. They're controlling these costs, continue to invest, and hopefully maybe turn around these top line results at some point. They're not going to rapidly go up, okay, unless they do some crazy acquisition, which I don't think they necessarily need to do. But as long as these numbers stay steady, I'll show you here. We come down, okay, so we've got operating revenue here of $31 billion. We spent, call it $24 billion. That gets us an operating income of $7.6 billion for the quarter. That's down 6% in the previous quarter. The last 9 months are trending down about 9%. Again, not super positive. That is why when you look at this stock chart, it is rolling over to a certain degree, but let's take a look at that dividend, because chances are you're buying Verizon for this $2.51 dividend, which is a 4.38% yield compared to any kind of other savings account. That is about as good as it gets. Take a look. We earned $4.5 billion. This is net income. This is after all expenses. Everything's paid. We're at $4.5 billion. This also includes some non-cash stuff. We'll talk about that on the cash flow as well, because we do have some depreciation expense right here. This is not necessarily a cash charge, so you could almost add that back in, or part of that back into net income, although they do have to reinvest that money at some point. So we're down on our net income, down 15%. That's not great for the last 9 months. Again, not great. It's a push and pull here with Verizon. But let's get down to earnings per share. Not a figure I always love to look at, but take a look. When it relates to a dividend, it's pretty much all you need to look at. We earned $1.05 per share in the quarter. That compares a little bit negatively to the previous period where we earned $1.26. But let's take a look at for the last 9 months. We earned $3.19. That is in 9 months. Okay, in 12 months, they pay $2.51 to shareholders. So you could add, assume the next quarter is as good as this one. So we make another dollar. So they'll make $4.25 in the year in earnings, and they'll pay only, I say only, $2.51. Okay, that to me is pretty decent dividend coverage. It also will allow Verizon to increase that dividend in the future. So I like to see that. Now, from an asset side, everything's looking really strong here, okay? So we've got $6 billion more in cash than the beginning of the year. We're going to assume that is coming from some kind of debt raise or debt financing and things like that, because the cash flows and the money that they're making is not that great, way over and above to make, clear $6 billion to the top line. But everything looks pretty good. Our accounts receivable, that's almost like cash. Most of this money is going to come in eventually. And so if you factor that in, they've got pretty nice assets, at least on the current side. Now, from a liability side, again, we've got some debt. So we've got debt maturing in 1 year that actually went down. So they either refinanced this or paid this back. We'll take a look at the cash flows, see if we can't dissect that. But take a look. Long-term debt right here, that actually increased by $9 billion. So if you take this in totality, we probably raised our debt by about $4 billion. So not necessarily a bad thing, but keep this in mind. They've got $100 billion in debt. With these high-yielding companies like AT&T and Verizon, you have to factor in, I don't want to say you have to ignore the debt. This is a lot of debt, but take a look. Property, plant, and equipment, they have to invest so much money into their business that, take a look. I mean, look at this. This is just a fortune in terms of plant and property and equipment. And then they have to depreciate it based on accounting rules every year as well. And so this equipment depreciates. They have to recognize that as a dollar figure, although it's not necessarily depreciating that quickly, but it might, you know what I mean? So they eventually have to update this equipment, put up new poles or new microwaves or whatever they have to do to keep service going. So just some things that you want to keep in mind. Now let's move down to cash flows. That is something that you want to keep in mind with these companies, because we pull down this net income. So we've got 9 months. So what we did is we pulled down this 9-month net income. So we got 13. It was opposed to about 14.5 in the previous period. But take a look. Okay. Remember, I keep telling you, depreciation and amortization, this is not necessarily cash, okay? They have to amortize this equipment just like you might amortize it on a business car or maybe a roof on your house, okay? You're not necessarily having to pay that money today. You're just amortizing this on the balance sheet. So from a cash flow perspective, actually take a look. We were at 26 billion. Now we're up to 32 billion. This is just like when the tech companies compensate their employees with stock-based compensation. The same type of expense is happening here with Verizon. So we have 12.5 billion in depreciation, and that positively affects our cash flows. Now, take a look. Capital expenditures. This is up for the last year or so. We were at 12.1. We're up to 18 billion. Most of it is up in these capital expenditures. So this is mainly, expanding the network, 5G, that type of thing. Now, you come down here from cash flows from financing. This is where you get a better indication of what they're doing borrowing money. So like I said, they increased their debt by about 4 billion. Here it is. They had 8.3. Here it is up to 12 billion. Okay, proceeds from asset-backed long-term borrowings. So that ticked up just slightly from the previous period, but we repaid some long-term borrowings here. So we paid down a little bit of debt, not as fast as we did in the previous period. We paid back some asset-backed long-term borrowings. We see that here. Now, dividends paid here, 7.6 billion. Okay, it ticked up from the previous period. So they either issued more shares or the dividend likely went up over the last 9 months. So again, $7.6 billion in dividends paid. So you could come up here. This is for 9 months. So we can come to the most current 9-month period here, come down to net income. They earned $13.6 billion. And I want to emphasize again, that includes some depreciation, which is not necessarily cash flowing out of the business. So $13.6 billion, and they paid $7 billion in dividends. This is a well-capitalized company, can meet their obligations, can pay their debt. Everything looks fine to me with Verizon. Now, it's not one of these stocks that is just going to go up to the moon. It's not like a Snapchat that is up like 20% today. It's not going to be like Tesla or a Netflix. It's going to fly up and down very rapidly. This is a part of your portfolio. It doesn't have to be the cornerstone of your portfolio, but as you get older, preserving your wealth and earning money on your wealth is a decent thing. Now, we see this stock ticked up way over. This is probably a 50-day moving average in this green line. And I have this upper trend line here, which is right where the stock is today, right? We'll call it $57 per share. Every time the stock has ticked up over that $57 mark, and this is since we made the March lows back here, like most stocks, the stock ticked up over 57, came back down. Stock went over 57, came back down. The stock went over 57 for a long period of time here, came back down, but we're coming into a zone where I like it. I love this stock. Anyway, I guess you could come here to the lower end of these candles. You could call it 53. I think it's better just to call it 54. Anywhere between 54 and 55.50 to me would be an excellent place to buy this stock, because we see when this stock is between 54 and 55, what has it done? It has wanted to come back up to the upper end of the range. So I would acquire, if you want to acquire Verizon shares, you want to hold it for the long term. Again, this is not necessarily a short-term holding. I think if you want to generate some dividend yield, reinvest those shares. Verizon also will have the ability to grow their dividend over time. I think anywhere in this 54, right at 54 up to 55.50 would be an excellent spot. If you want to push the envelope just slightly, I would wait just a little bit. Okay, I think we're right on the precipice of this stock. Either it might hold this level. Now, Verizon might hold this level and then bounce up and maybe retest this 50-day moving average. That's possible. To me, that's not something I would be super interested in adding shares. Full disclosure, I do own some Verizon shares, and I definitely would add if we fall into this lower end of this range. So that's Verizon for you. Again, off a little bit today on the news. Markets down in general. This is one I would definitely look to add to as a long-term hold. Again, if you think this dividend is juicy, has the ability to raise it, and you would like to buy and hold Verizon, consider hitting that like button and maybe that subscribe button as well. I'll be back again later today with more stock analysis. Good luck with your investments.